Hi, everybody, and welcome to 2021. It feels remarkably like 2020 so far, so here's to things smoothing out and settling down some in the coming weeks and months. This is the second podcast in our Executive Roundtable series where we pick the brains of IT leaders across different industries and get their perspectives and insights on technology trends, opportunities, risks, and much more. We are pleased to have Gregory Wilson, Chief Information Security Officer at Pioneer Natural Resources Company, a natural gas production company based in the Permian Basin in Texas. So without further ado, here's Greg.
My name is Gregory Wilson, Chief Information Security Officer at Pioneer Natural Resources. So we're a oil and gas E&P exploration and production company. We're exclusively located. All of our assets are in the Permian Basin. I think we're the largest. We own more assets in the Permian Basin, Midland, Odessa, Texas, than any other oil and gas company. So we're one asset company. We sold off our other assets in the other parts of the world. Um, and so I've been here 2 years. Spent I've been in this space, information security, governance, risk, compliance. Over the past 20 years, probably half of that has been in financial services. And so that's military guy, spent 8 years in the Air Force. So that's a little bit of my background with the University of Nebraska undergrad and with the OU grad school. So that's a little bit of kind of my background and how I got here.
Fantastic. Thank you, Greg. So let's jump to it. So, Greg, when you think about what's going on today in our world, specifically with the pandemic, right? It's been almost, 6+ months now that things have been going crazy around the world. What has you, from a CISO perspective, how does that impact your world from a security perspective? In addition, what is that look for your company, any readjustment global that they have to take in order for them to face the current situations that they're facing with COVID?
So that's a very good question. For oil and gas, this has been a double whammy. Some would even say a triple whammy. So you had the initial shutdown, which happened, you really start to see it the first part of March. And most companies started to send their employees home the middle of March. And pretty much by the time you got to the end of March, pretty much most of the US economy was shut down. Well, when you think about to oil and gas company, that means no one is driving, no airplanes are flying. And that is two of the biggest drivers of uh, oil and gas revenue, uh, primarily on the gas side. The other big whammy that hit oil and gas companies that happened and people really didn't pay a lot of attention to was the issue with Russia and Saudi Arabia.
Mhm.
So they had their disagreement, and when they couldn't come to agreement on the amount of oil that they wanted to, and they both said, we're going to not only produce, we're going to produce more, which at one point drove the barrel oil to negative $37. So literally, there was a point in time to where they were paying you $40 to take oil, and people don't understand how that could happen. But when there's no value to sell it, you have to have their storage tanks. And once you run out of storage tanks, then you have to get rid of it, or else you're going to dump it on the ground. If you spill it, then you have EPA fines, et cetera. So it's far uh, more cost effective to pay someone to take it than it is to
Mhm.
continue to hold it. Um, so over the last number of months, oil and gas have gone through it's a pretty tumultuous period. You see a number of service companies that have declared bankruptcy. You've seen a number of oil and gas companies that have declared bankruptcy. So it's still a very, very, very difficult market in the oil and gas arena. Ways that it's impacted us as a company has been 5, 6 years ago, Pioneer, their goal was to grow at 25%. 2 years ago, we said, that's a bit too aggressive. The stock market, the investors want more money returned back to them. So that growth percentage was reduced to 10 to 15%. Our last quarterly earnings, we said our growth will be 5% or less. So practically no growth. The primary reason behind that is many people think that we've hit peak oil, i.e., we've hit our maximum oil use per day. We hit that, and from this point, it's only going to go down. And so therefore, there's no need to continue to produce 10, 15, 20% per year, because there's not going to be anyone to buy it, and you're just going to drive the price of oil down. So what you've seen is a number of oil companies reducing staff, and the impact that's had on us is we went from probably 40, 45 projects this year in CapEx down to maybe 5 or 6. We're pretty much, most oil and gas companies' CapEx expenses was reduced 50, 40, 50, 60%. And you're primarily doing, KTLO, keep the lights on, and then other projects that would have to have things that are going to make you more efficient, or something that can increase your revenue. But you're talking a very small subset of your projects, because right now, you're going from a $3.5, $4 billion capital budget to $2.5, and a majority of that is drilling. With fracking, the production goes like this, and then it drops off quickly. So you always have to reduce a set amount just to keep your production level. So a majority of the funds now are going really toward maintaining and growing just a little bit. When we sent everyone home, it just so happened we were planning on doing a test of our capabilities. Most oil and gas, well, I can't speak for most of the independents, you tend not to. When I say independents, I'm excluding the Shells, the Exxons, the big boys, the bigger integrated companies, the smaller E&Ps. There's not a culture working from home. You have a subset of people who work in the field. Their job is always in the field, so they're not in the office. It's probably 20%, but the vast majority of people work in the office. So we went from, of that 75% that work in the office, pretty much all of those people always worked in the office, to everyone being at home. So we immediately had issues with VPN, because our infrastructure wasn't designed for 100% of the people to work at home. Additionally, we have people who it's really not conducive for them to work at home. A lot of our engineers and geos who's dealing with large data sets and doing a lot of analysis, it's not really conducive for them to work from home. So we have to beef up Citrix and VDI infrastructure to be able to accommodate those use cases. Additionally, those people are accustomed to having 4 45-inch monitors that they're looking at. Again, those things, you typically don't have that set up at home. So we went through a period of 2 to 3 weeks it took us about 2 or 3 days to get the network piece of it done, get burst licenses for VPN. And fortunately for us, in November of last year, we moved to our new headquarters. And so we went from, two gig lines to 10 gig. So we have bandwidth galore. And so we were fortunate. We didn't have any of those issues. Most of our issues was just increasing VPN licenses, which is buying it and turning it on. So when it really came to things that impacted us from a security standpoint, there really wasn't a whole lot of impacts. We rolled out some additional security features because everyone was now mobile, and there was much more of a reliance on mobile devices. And people going off network and being really concerned about people having compromised home network or people just being on their own Wi-Fi and potentially getting affected. We rolled out tools that would offer network like protection on mobile devices when they were off network. So we did, a few things like that, but for the most part, we really hadn't done a whole lot. We beefed up our DLP presence, but I mean, it was more tweaks. There weren't a lot of there were not a lot of wholesale changes that we had to make. So that was a long answer to a pretty short question.
Greg, did you see some separation or some stratification in your industry segment between companies like yours, where it sounded like you were able to get up and shift to the virtual model fairly quickly, versus maybe some competitors who are still struggling with it 6 months later? Did you see some separation there?
Well, fortunately, I one of the things I did probably 9 months ago is we create an oil and gas CISO roundtable where I get a bunch of the peers that are of my peers. We all get together and we talk about the challenges we're facing as security. And most of them have said they were similar to us. That first week was the most difficult week simply because, no one really planned to be 100% virtual. And so once you got over that initial bump in the road, then you had other issues and, coming up with systems to create tracing. So like for our office, something that's somewhat unique is we provide food for everyone. And so when everyone went home, that went away. Then the middle of July, some people came back into the office, a very small percentage of people. Well, the facilities people needed to know, okay, how much food do we need to provide? The other thing is, how do we know people are cleared to come back into the office? And so we had to create these apps that would connect, which would allow the security guard to let them know, hey, which people were safe to come in the office. And then it also created kind of our contact tracing list. So if someone was impacted, we could say, hey, someone in the building had COVID. These were all the people that were in the building. This is their office. We closed all of the conference rooms, and we really only allowed one person at a time. Literally, the food was packaged up. You walked in, grabbed it, went back to your office. So you could start to figure out, okay, who was located in the same general area. And those would have been the people you would have really spoken with to try to figure out if they came into contact. So we had more things along those lines that that we had to deal with, and now protecting, PHI, where we really didn't have to deal with that too much.
So you were talking about the impact that the industry has had, and that a number of companies have gone out of business or are going out of business, and you also don't see the oil consumption going higher than the peak it's already been at. Do you see, as you guys come out of this, an opportunity to grow through the other companies that are declining and shrinking?
Possibly, yes. But the big challenge that we have is that the way it looks, or no one knows what COVID is going to look like. So, we've heard about the vaccines potentially the end of the year, first part of next year. Will this be more like a flu vaccine? There were questions whether or not if you got it once, would you get it again? Mm-hmm. There are some reports beginning to show that there have been people who've been infected twice, even if you get a vaccine. So that's one piece that's a negative, because the hope was that people would get it and then be immune, and now you have a subset of people who couldn't get it again. The other thing is the vaccines. Will it be like the flu vaccine? Is it going to cover all variants of COVID or just part of the variants? How long will it cover for the variants that is scheduled to cover? And so those things, all of that news hadn't really been positive. And so this appears to be what I call the new the way things will be. Before, BC stood for before Christ, and it always will. But to some people, it'll be before COVID and after COVID, kind of like air travel. Travel after 9/11 has never been the same. I personally think the way that we will live will have fundamentally changed. It will continue to be different than the way it was before, because I think COVID is going to be with us for a very, very long time. And because once the vaccine does come out, there's questions around whether or not it'll be widely available. If it is widely available, whether or not people feel comfortable taking it. We have the issues with schools, with them not opening. All of that impacts oil and gas companies, because if people are sitting at home, like it appears many of you are, that means you're not driving. That means you're not using oil. That means you're not traveling. And those are the biggest drivers of the use of oil and gas. As long as those conditions are present, airline travel is 8 to 10 million barrels a day. Cars are 15, 20 million barrels a day. So when you start to have reductions of 30% of oil production, most of the smaller companies are the ones that have fallen offline. There's not enough of them falling off to make up that depth. So the demand is falling off much greater than the supply.
Yeah, I heard they don't expect the airline industry to really be back till 2024 because of the business travelers. Like consumers, just regular consumers, will probably come back sooner as some of the variables you were talking about become more solidified. But they were saying that business travel as we know it is radically different because of just all the things business travel was always a huge expense for companies. And I'm sure that many companies have figured there's an opportunity to greatly reduce that expense. That's 4 years away from, you figure we're getting close to, hopefully we're getting close to the end of this with the vaccine coming, in the next 5 to 6 months. And they're still saying 3.5 years after that. So that's a long time to have that loss of consumption.
Yeah, I worked for a company based out of Germany 2 companies ago, and we went through a big downturn, and we would be, prior to that downturn, we would go back and forth to Germany on a quarterly basis. We got accustomed to doing conference calls and WebExes and things of that nature, and they quickly realized people were as effective, and all of a sudden that $20,000 trip no longer made sense anymore when you could accomplish the same meetings via WebEx and it didn't cost you anything.
Yeah. Greg, one quick question for you, and maybe this doesn't apply to your business model. What from the technology advances with Shell Oil, is that an area you guys play in? Does it have an impact in your production also? I know you said you divested assets overseas and are focusing more on national, but where do you see that playing? That was an industry for some of us that was kind of growing in the, maybe 4 or 5 years ago. Has that been assets you guys have also acquired? Or is there a play between where you're pumping your oil from?
Well, that's the business we're in, fracking shale oil. So that's our business. The oil is there. There's just not the demand for it.
Does the price weigh into that for you, Greg?
Well,
when the price goes up and down, or where we're sitting right now?
Well, at $40, it's really, really difficult. It's really difficult. This is not the level for growth. You probably need it another $10 to $15 higher. Okay. The big reason for that is when you start to look at oil and gas, the big reason to be in oil and gas is for the growth. If there's not a lot of growth, then people look at other industries. If people are going to hold oil and gas, they look at the Exxons, the Shells, the bigger companies, which leaves the smaller companies counted off to the wayside. A couple of years ago, you've heard this term more recently, economic destruction. Mm-hmm. And what that means is you're selling a product for less than what it's worth. Most oil and gas companies can't be profitable at the price levels that oil and gas has been. So by continuing to produce, you're committing economic destruction. And so the market no longer rewards that. Now they want you to return free cash flow. Well, in order to do that, you have to grow at a much slower rate uh, in order to live within your cash flow. And they're really punishing companies that don't do that. That started to reflect itself a couple of years ago, and
Mm-hmm.
this just exacerbated that situation.
Yeah. Hey, Greg. I'm off mute, right? Yeah, I see my little green light there. Hey, going back to the conversation around a majority of the staff works remote, et cetera, and you've put a few things in place to expand capacity and expand some security controls and so forth. To what degree did you have to re-educate or provide additional education, security education to end users to hopefully have them behave right while they're working at home, right? Because as we all know, behavior becomes one of the biggest risks to the security profile of an organization and do silly things. So did you find that you had to go through a level of additional or re-education of the community to make sure that they don't do silly things while they're home?
We had a pretty robust, so we do phishing tests quarterly. We have formal security training class. We also do my goal was always to kind of create this, um, as I call, a culture of security. And
Mhm.
so we always pushed out security awareness training. The way I approached it always was, if I can teach you how to be safe and secure at home, you'll bring those practices into the office with
Yeah.
you. And
Mhm.
so we've always had a high touch area when it comes to security. And what we find is that you have your frequent flyers. You have those people, no matter what you tell them, you offer something free. They'll give you everything to get it. Um, and so
Mhm.
uh, it's really about then creating systems to where you create kind of the onion. You put those your key core assets. Um, you have those well protected, and then you kind of layer it out.
Mhm.
And that's approach that we've taken, really focusing on uh, uh, the least privileged doctrine, making sure people don't have access they really shouldn't have. Getting back to that blocking and tackling, making sure that you're
Mhm.
keeping systems patched, making sure you have unnecessary services turned off, really keeping our cyber hygiene up to speed, because the fewer openings that you can create, the greater likelihood you, if there's something does go wrong, that you minimize the impact to the organization.
Fantastic, man. Fantastic. Hey, and another question I have, earlier you talked a little bit about, you know, the focusing of the organization, right? Getting rid of assets that no longer fit the profile, or offshore assets and so forth. So in my terms, of course, that means the company divested certain things.
Mhm.
Uh, so as you've gone through, and I'm assuming that you've gone through a few of these with the organization, is there any interesting cybersecurity learnings that you were able to garner as you went to divest and unplug these assets from the mothership, if you will?
Wow. Um, uh, we've learned that people have some very interesting interests. As we've taken back some of the PCs and discovered some of their hobbies, um, we've discovered that people have some very interesting hobbies. I would
Yeah.
just leave it at that.
Mhm.
Uh,
Yeah, politically correct way to say that.
yes.
Hey, hey,
So I'm sorry, go on, Jock.
no. Carry on.
So that's been our biggest challenge. Most of our assets, we did a really good job in being able to segregate the network, cull those pieces off. If we're going to give them, some of our security equipment like that were in the offices that we sold with it, setting up transition agreements to kind of um, wean that off. Sometimes giving them some of the assets that were there, laptops, etc. So we've had some challenges there because we don't have enough resources in asset management. I was on a call today where a laptop suddenly, we froze it, and the new owner of that laptop called us and said, "Hey, I bought this laptop and it's saying that I can't use it now." And, we realized when we disposed of it, which it was disposed of properly, they didn't unenroll it out of the system that we use for tracking.
Mhm.
And we still showed it as a current asset. So, working through those issues. But that's been the biggest challenge, but that wasn't a surprise. We knew that that was an area where there were some opportunities to improve it. Um, but it really, one of the things, some of the other dispositions did, we really beefed up our DLP, because there were times where we were distracted looking at this when this was probably more important from a corporate standpoint. There were some other legal concerns around some of the other material, but from a corporate standpoint, this other thing was more important, but we didn't have a really good way to differentiate between the two, so we gave them the same weighting. We've now corrected that issue.
Mhm. And I'm assuming as you've gone through creating these transitional services agreements, i.e., we've kind of unplugged you but didn't, right? You still have access to some transactional systems and you have a period of time to create your own and then transition. Did you come across any crazy kind of frameworks that made that a very difficult process to go through with these transition
No,
service agreements?
no, we not really. Our biggest challenge was you broke some business processes that ultimately came back and haunted us later as we went through SOX, because we broke some processes, some things that would normally alert and drive other things to happen by stopping that function. Some of those things down when did not occur, and we had to do some cleanup later.
Uh,
So we had some additional pain there that we just simply didn't think through that entire process.
got
But it's one of those things to self-critiquing. Uh, it was painful enough to where subsequent ones we did not have that issue.
got
So
it. Thank you, man.
on the same line of questions, it seems that you went through a significant business contraction, because looking at your footprint overseas, looking at what's going on at US overall, layoff. So I'm assuming there have been significant uh, site integrations, right? Not to call them acquisitions or divestitures, but site integrations, so that you can, and specifically since you talked earlier about that, you have moved to your to a new headquarter. Have you seen any significant demand as far as to bring external resources to focus on helping you managing uh, those type of integrations, or is it something that mainly was driven internally?
Most of it, most of it was driven internally. Sorry about that. Most of it was driven internally, typically where, because if you think about an oil and gas, if you have a location, where it happens to be, Nigeria or in the Gulf or wherever, most of those assets are in or around, they're going to be local. So if you divest of that, you sell off all of those assets that are in place. Where the other piece you have to think through much more clearly is, okay, what percentage of your corporate assets were required to support those? When we did our layoff last year, that's really where that was focused, because we were always very good at getting rid of the local resources, but a lot of the corporate resources we really didn't get rid of. And so we had to divest ourselves. We had to slim down that group of personnel. We tend to use a lot of contractors, but they tend to be more uh, field contractors or project contractors. field being in a lot of the service providers, those ancillary activities that need to occur that's not necessarily part of our core competency. The other piece is, like for example, 2018, we did a ERP, we converted from an AS400 to Oracle EBS. And we had all four of the big four in there as part of that project. So they tend to be more project-based on things like that and not necessarily strategic.
Thank you.
So it's interesting just talking about your ERP integration. That was done pretty recently. I mean, that's a pretty significant migration from an AS400. I think we've all been on those in the past. And but it was just, just shy of 2 years ago when you guys did that. How has that helped you through all of this? Because I don't downturn from just the overall downturn of the in your found that to be a significant resource for intelligence and information, or is it one of those things that it hasn't really mattered?
It went live in May 2018. Within 6 months, we created a project called Stabilization, and that ran until probably 6 months ago. And now we're in continuous improvement. It has been a challenge. Most oil and gas companies don't go with Oracle. They go with SAP. There are some, but the vast majority, we took a path not often chosen when we went down that path. It has been a struggle, and it continues to be a struggle. Part of it was the way, and I wasn't there when the decision was made, so I can talk about them and be completely transparent, whereas those who are involved in it, there are different perspectives on it. But ultimately, the mentality, the approach that they took was that we're going to bring in different parties. So we brought in one of the big four who managed all the infrastructure. And then we brought a different big four partner to come in and manage a lot of the security and compliance pieces of it. We basically told people, keep doing what you're doing. We're going to bring in contractors and consultants to kind of manage it. I mean, that sounded good until we started getting the bills and said, whoa, I really don't think we want to do this. So then they started hiring personnel to start to bring some of this stuff in-house. And so it's a whole lot better now than it was when I first joined. We were spending 8 figures in maintenance and support of this, and now that's significantly reduced. So to the question, has it helped? It's better now. We've spent a lot of time and money and dedicated tons of resources to help people better understand the tool that we have in place and to glean more value out of it. We currently have a project specifically around reporting because simple things, and our previous CEO who lost his job in February or March in 2019, one of the big challenges was simply that you couldn't get good capital reporting until some period later. The system just was not conducive to doing it. And a lot had to do with, we want to take Oracle and make it work like our AS400 did. And no matter how much and how frequently and how vehemently you tell them that you don't take the new system and try to make it work like the old, the operators of that system wants it to work like the old one. And so that created challenges, and challenges that still exist.
Yeah, there's some significant process mapping and process state of desired state that needs to be done before you get into that. And often that's not appropriately appreciated or understood. And the time isn't taken on the front end to do that. And you end up spending 2 to 3 times the time on the back end fixing it.
Very much so.
So, Greg, with all of the business contractions, it seems like rather than going back to your point that obviously you were relying a lot to external sources, and then now you bring internal sources to really get some of those projects going for you. So did you increase internal staff from an IT perspective, or you retain all of the IT staff as is to address all of the stuff that's going on from a business perspective?
No, IT staff actually has shrunk significantly. When I joined, we had 190 full-time resources and 400 contractors. And now we're down to 145 internal resources, probably 235 contractors. And many of those are managed services. There's probably 20% of that number are project resources. And so the actual number of resources have shrunk significantly. We were very fat. The only place, to be honest with you, that was worse than oil and gas is the 3 years I spent in private equity. I mean, if you had a project where it's $500,000, you didn't even really have to go get approval for it. It was like, oh yeah, just go out and do it. We'll figure it out. Yeah, that's fine. Just go out and do it. And in both industries, they were sufficiently humble where those practices free spending and not being very strategic in their thought came back to haunt it, because they realized they were very, very bloated and not being good stewards of the funds that they were entrusted.
Got it. So if you think about the current environment today, your business environment, what project keep you up right now, get you excited about from an IT or maybe from a security perspective that's going on right now in your environment?
To be honest with you, one of the things that, because of the free spending ways, when it comes to tools, we have every tool available. Matter of fact, we have 2 or 3 of them. You just kind of pick the one you like and use it. Our bigger issue is really how to, for me, I told them I just don't feel comfortable spending anybody's money that way. And I definitely wouldn't spend mine that way. So my bigger project has been, how do I rationalize what we have and make sure we're using it? You know, I believe in defense in depth, but we don't need 6 of these. You know, we don't need to have, 80 tools in place and all of them are sitting at 10% utilization. So how do we, rather than going out and getting the best of breed in every solution, go out and look at, okay, what really needs to be part of our core platform? And then let's come up with an architecture where where we have our defense in depth, but we have all of these that are working together. Because the other thing it drives, when you have tons of tools, you need tons of people who know how to use those tools. Mm-hmm. You have tons of money that's invested in training people to get up to speed on those tools. You're paying for really, really expensive resources to use a tool, but it's only 5%. So you have, I can't go find a quarter of a firewall guy, so you're forced into making, the organization was forced into making really bad hires, because you would hire a resource to do something, but it wasn't a full-time job. So you had a ton of people doing partial tasks. So it's really been, for us, it's my big push has been, let's get back to the basics. Let's get back to the core things we should do and then build up. because we've gone out, we've rolled out, you know, you name the tool, we have it. But we're not really using those tools effectively. So the last 2 years, we've shrank our tool set 25%, and we've really focused on increasing our governance, our processes. How do we take what we have and use it better? How do we put the processes in place to make sure we're doing all the care and feeding rather than just getting more things in that we're not utilizing?
Hey, Greg, you touched upon a great point, and I think it's kind of an area that is near and dear to what TechPides is looking to do, given the resource pool we have and the consultancy that our different areas of expertise lie in. So maybe you can spend a minute or two talking about how that process works internally. Is that led by the IT organization? Is that a collaborative effort between yourself, finance, operations? You talk about leaning things out and making those selections. What have you seen to be the successful process to get to that point so that the system adapts to a defined, agreed to operating process, right? Because that's what it's got to tie to at the end of the day.
Yeah. So what we did is we looked at our security framework and looked at, okay, let's see where we have coverages, what controls we have in place, what's working, what's not working. Then we start to look at, okay, where is it? You know, in some places you had 6 tools that were doing or were capable of doing the exact same thing, but you know, you only had pieces implemented. So it's like, okay, well, what if we add this, then we can get rid of this tool. And so we spent a lot of time doing that. There were other areas where there were some areas where we didn't have coverage. So we got rid of, you know, 4 tools and purchased 1, and still our net cost went down. And so that's really where the focus has been, is really looking at establishing a framework by which we view security, and then evaluating our security posture based on that framework, and not making it all tool centric. For me, it's people, process, then technology.
Right, absolutely.
Making sure we have the right people with the right training. So I've spent a ton of time over the last year getting people trained, assigning primaries and backups to various tool sets, telling them, hey, this is your tool. It's your job to make sure it's patched, it's upgraded, that you're doing your business reviews, that it's tuned, that it's working. And if not, then you and I will have to have a conversation later about that. So establishing ownership. Previously, you really didn't have that in place. You know, upgrade plans. What is it that we should be thinking about that we're not thinking about? You know, where are we now? But more importantly, where are we headed? And
I think the other big piece of that too is the acceptance and people, the utilization of these tools. Quite often, this stuff gets implemented and the users never buy into it for whatever reason, you know, and you've got a great tool, but it's not really accepted. It doesn't become part of the mainstream, part of the processes, and so then it never can be effective to ultimately what your desired results were that you put it in for. And you're almost better off, at some point, you're almost better off without it because the acceptance is so low. So I think so many companies they get so focused on the tool itself or the technology itself, they forget to look at how do I get the acceptance of the users, so that, and the ownership by the users, so that ultimately that's equally as important as the technology itself or the tool itself to drive that overall efficiency and effectiveness of the tool.
absolutely. That, and you know, we spend a lot of time strengthening our relationships with our partners we work with most, HR, physical security, our corporate security team, and really making sure that we have the things that we need to have together to work together and be effective, which kind of goes back to those processes. So that's really where we spent most of our time.
Does that tie into some kind of a strategic plan that goes over, you know, a couple of years, and you're constantly looking at the different initiatives and restacking them and reprioritizing to the demands of the business?
Yeah, it came back to one. We implemented an enterprise security solution that's shared amongst kind of those stakeholders. Before IoT or ICS, industrial controls system, wasn't part of information security. We brought that in, implemented a 3-year process to get it up to a corporate standard. And then the other thing was just we have this concept of embedding. So I embedded a resource in each of those key partners,
Oh,
so
fantastic.
that we have someone who sits with them and works with them every single day. So
Yep.
we always know what they're doing, and they can bring back challenges to us, and it just really strengthened that relationship.
Yep. Yep. That's fantastic. Good.
Fantastic. I think we almost at time, Greg. We enjoyed thoroughly the conversations that we have with you. Anyone want to go for the last questions?
There's too many to ask. Maybe not a question, but Greg, thank you so much for the conversation on my side. Very enlightening as a finance guy, and I think there's a lot of overlap between what you were doing. It kind of ties back to the profitability and the operations, which is something we enjoy completely. So I appreciate the insights, and it just kind of gives more food for thought on my side. So thank you.
Thank you. Hopefully, I was able to answer all the questions that the team had in mind today. Hopefully, my long answers didn't cause you to miss an area of importance.
No, actually, we enjoy it, and thank you so much for allocating that hour to.
Thank you for joining our second Executive Roundtable podcast. We hope you found it as enlightening and enjoyable as we did. Thank you again to Greg Wilson for spending this hour with the TechVides team.